Everyone, welcome back to Make Florida Your Home's channel. Thank you for joining us. I'm really excited today to cover with you the FHA loan and all of the program offerings that FHA has rolled out and has made more affordable and offered some more guidance on being able to find a loan program within the FHA product offering that's the right loan program for you. So oftentimes I have home buyers come and say, Ryan, I want an FHA loan. And they think that there's one box that they have to fit into, and that's the only box that exists. That couldn't be further from the truth. FHA has done a fantastic job of rolling out these subset programs that, depending upon your situation, could be fantastic opportunities for you to take advantage of. Now, it's really important that you have a good understanding of all of the products that are offered, because if you get into the wrong product or just the standard FHA program, you could be leaving money, opportunity, time, all on the table. So in this video, we're going to go through some basic requirements, and we're going to go through all of the products that FHA offers, so we can make sure that as you're going through your home buying journey, you're utilizing all of these programs. So first, let's just go through some general program information and some kind of baseline rules for using an FHA loan. First thing is credit score. They'll go down to about a 500 credit score, but if you're between 500 and 579, you have to put down 10%. If you're at 580 credit score and above, you can utilize their 3.5% down payment option. So they accept lower credit scores comparative to some conventional products out in the marketplace, which is a barrier that you can get through now with maybe not having top tier credit, but still wanting to get into the game of home ownership. And you'll notice that through those offerings, that low 3.5% down payment, assuming the 580 credit score is there, is a really good way to be able to come up with the asset plan to get yourself into the property that you're looking to achieve. The next thing that I just want to cover is when you're using an FHA loan, this loan is made for you to occupy it as a primary residence, okay? And that's really important because oftentimes I get calls about people trying to make it investment properties or things of that nature. And it's always good to have a plan down the line. But at the same time, when you're purchasing and we're taking this first step, you're signing that this is going to be a primary residence. So I always like to tell people, and set that expectation that when you're using this low down payment, flexible credit score, FHA product offering, just know that you're saying and signing that this is going to be a primary residence. So that's really important as well. The other two things I kind of want to jump into are appraisal requirements, where they do want to make sure the 3 S's: safe, sound, sanitary, everything structurally and fit. There's no peeling paint. Oftentimes buyers get really afraid of these appraisal requirements. They're not that bad. When you compare it to the conventional appraisal process, there's plenty of similarities and not that many differences. All FHA wants to make sure is that structurally the house is good. If there's some peeling paint, it can be scraped and cleaned up. Screens missing or handrails missing. A lot of these things can be solved for pretty cheap money, and also you don't have to go and completely repaint a house to make it fly FHA. Just go through the affected areas, do some sanding, painting, I call it putting some lipstick on it, and achieve these barriers that may be preventing it from passing the FHA report. Realtors, you can also work with the selling side here. So if you get an appraisal that comes back bad and it's like, oh no, we have X, Y, and Z that's wrong, that's not a big deal. You can go approach the sellers, the buyer and sellers can work together, and when they work together, they can tackle this list of items that needs to be cleaned up, and then the appraiser can come back and check the boxes off that the property now meets the requirements. So oftentimes this appraisal matter is like a big point of emphasis, and I take a completely different approach. We can work through these things, and we do daily here. So don't let that discourage you from using a mortgage that can get you in the game. The next thing is loan limits. This is something you have to keep your eye on for whatever county you're in. Be sure to look at the one unit, 2 unit, 3 unit, and 4 unit loan limits for your county. They vary by county. I can always jump on the phone with you and verify this, but we want to make sure that we just go through some of these nuances to make sure we're not putting in offers that may be over the loan limit, and then that would increase your down payment, and it's just not good planning. So we want to keep our eye on those loan limits. The final thing is, what properties can I buy using an FHA mortgage? So you can buy single families, condos, 2 families, 3 families, and 4 families. So as you can see, that gives you a lot of options in the marketplace to go use this mortgage and be able to find a property that fits your needs and use this program to do so. So let's dive into some of these program specifics. So the first and most common FHA program is going to be the FHA Basic Mortgage Loan. It's called the 203B. There's really no special components to this program. It's kind of their standard vanilla product where they're evaluating credit, debt to income ratios, which we've seen FHA take, almost 60% debt to income ratios based on some compensating factors. You can use this program for single families, condos, multifamilies up to 4 units. And it's a fantastic way that if you're just looking for kind of a vanilla FHA purchase, this is a great way to utilize that low down payment, get yourself into the home, and then be able to come up with a game plan of the next steps once you secure the debt. So this first product, the 203B, is just your basic FHA loan, where they've done a great job of establishing a low down payment, set mortgage insurance ratios based upon what you're putting down, and comparatively to some of these conventional private mortgage insurance options, they're being very aggressive and actually lowered these this year. So this can really help you from a cost savings standpoint of out-of-pocket money when you factor in these FHA mortgage insurance premiums comparative to what's being offered in the conventional route. FHA has plugged in these low mortgage insurance routes on their product line. Interest rates, the $1 million question right now. Because of where the market is, and this is for this current market, the future market, this comment is for FHA loans comparative to other products in the marketplace. FHA loans are historically lower than conventional loans. Now, why is that? The reason is that these FHA loans are government insured, right? There's upfront mortgage insurance, which goes to, providing that guarantee to the secondary markets. There's monthly mortgage insurance, and the government wants to be involved and help create homeowners, so they're buying and sponsoring these kinds of programs. So what that means is when you have something sponsored by the United States government, the end result is going to be that it's safe and secure because the government's always going to step in no matter what happens with that product or loan. In return, what does that equal for a consumer? Lower rates. So if you were to look at, conventional rates compared to FHA rates, a good ballpark is anywhere from 0.5% plus to a lower interest rate comparative to what a conventional rate would be offered in the marketplace. Now, a variety of things are going to go into this: credit score, down payment, property type, and things like that. But the takeaway is that there's a significant savings opportunity through utilizing an FHA loan, which is really a starting point loan to kind of build your portfolio, get your first house done, and maybe get into a house where your credit profile doesn't meet these conforming guidelines at the time. And that just helps you keep your monthly payment nice and low. The next FHA mortgage that I want to talk to you about is one of my personal favorites, the FHA 203K. I call this the money maker. So basically what you do with this program is, let's say you see a house and this house maybe needs some love, right? Some TLC. It needs some paint. It needs a roof, electrical, plumbing, you name it, right? It doesn't matter what it needs. This program can help you. So what ends up happening is you have your purchase price and then you have your construction costs, right? And you're going to take both of these numbers and you're going to put them into one loan. And this FHA 203K loan is going to allow you to work with a contractor and a HUD consultant. If the work that you're doing is over $30,000, you typically need a HUD consultant mixed into this equation. And between the HUD consultant and the contractor and the mortgage company, they're going to give you the money that you need to go to the contractor and have the work done to your house to be able to complete these repairs, upgrades, or dreams. So you take basically a house that maybe checks some of the boxes, you use some of the money, you add the money into your loan amount that it's going to cost you to get the house to where you want. And then once this is done, after you close, construction starts a week after, the draws go out, and we get the project rolling. Typically, these projects take about 6 months, maybe less if it's a smaller project. But you have the bank, the HUD consultant, if the work's over $30,000, if not, you don't need the HUD consultant, and the contractor working together, funneling the money into the project and getting you the home that you want. Oftentimes, especially in tougher markets when there's less inventories, buyers are making a lot of concessions. With that being said, when you match this product up with this loan program and the specific property that you're looking at, you're able to go into these homes and create some amazing opportunities for yourself and sweat equity. Because after you do the work, you're going to have a higher home value because of the amount of upgrades that you did to the home. So this is really a fantastic loan program to look into. The 203K is one of my favorites, and I've done hundreds of them. And they're really rewarding when you go in with a house, then you factor in your plan, you get the money, and at the end of it all, it becomes a reality in the home that you want. So definitely consider the FHA 203K loan. The next program that I want to talk about is the FHA Good Neighbor Next Door program. This program's made for people like teachers, firefighters, EMTs, law enforcement, and basically what the program does is it creates benefits through interest rates and costs, and even can open up some specific properties that are HUD sponsored to be able to create opportunities for the people that make our lives in the community great every single day. So you have to work a specific full-time job, like I mentioned. You have to basically live in this home as a primary residence, and you can't own any other properties when applying for this program. So there are some nuances and there are some things that we have to basically verify to make sure that you fit all these boxes. But at the same time, you're gonna have significant discounts on home prices that are sponsored by this program. You're gonna have reduced down payment options and interest rates, and you're gonna be able to have the ability to grow equity in the future through being able to capitalize on these initial benefits up front. So the takeaway is that if you are in one of these job types, it's 100% worth going and looking at the Good Neighbor Next Door program that FHA offers, because that can open up some significant cost, property, and overall loan configuration savings. The next loan that I want to jump into is the FHA Energy Efficient Mortgage Program. Essentially what this program does is it's going to jump in and basically find a way for you to take your property and make it more energy efficient. So that's going to be things like solar, insulation, and in this program what they're going to do is they're going to do a full energy assessment of the home. So when you're doing this assessment, if they go and they look at the windows and they're like, oh my God, you're losing 30% of your heat because these windows aren't done, they're going to add the windows to the upgrade option. Same thing with like the insulation and some of the roofing components and the solar opportunities. This FHA program is all about taking your home, making it green, and giving it an opportunity to be more efficient. The next thing I want to talk about is the FHA condo program. So the FHA condo program, a lot of people don't think that you can get condos done FHA. That's not true. FHA just has rules and regulations that the condo association you're buying into must adhere to. And things that they're going to really jump into are insurance and budget. If you look into, and also the safety of the project as well, that's really important to mention. So if you jump into a condo property and you need a set of eyes to look at the budget and have a review done of the entire association, our team can walk you through that and make sure that it ends up working out and that there's light at the end of the tunnel to get this project approved and be able to capitalize on buying the condo you want using this FHA condo program. The next thing I want to jump into is a cash out FHA program. So you can actually use the FHA program to refinance. You have to live in the home as a primary residence. You need at least 20% equity in the home. You have to have lived in the house for 12 months. Credit score needs to be about 580. Can't have any mortgage lates in the past 6 months. And generally you want to see your debt to income ratio about 43% on this product. So the benefits are, when you have ability to leverage the equity in your home, that's going to allow you to diversify some of your equity, consolidate debt, and basically take the money that your home has helped you make and move that into other areas of your life that I mentioned. And maybe if you're interested in expanding your real estate portfolio, you can go buy other opportunities like second homes, investment properties, and utilize this equity and spread it out. So the cash out option is amazing as well. FHA also offers adjustable rate mortgages. They're not only fixed rate mortgage products. What this adjustable mortgage rate product can help you take advantage of is adjustable rate mortgages are typically lower than set 30-year fixed mortgage rates or 15-year fixed mortgage rates. In a time where there's some economic uncertainty, what this is going to allow you to do is, if you choose one of these programs, you're going to be able to set the interest rate lower, which is going to help you keep your monthly mortgage payment lower. As the market settles down, which a lot of home economic people are forecasting, like Fannie Mae, Freddie Mac, National Association of Realtors, Mortgage Bankers Association, all of these groups are predicting that rates are going to come down. So when the rates come down, you can refinance out of your adjustable rate mortgage, get into a lower adjustable rate mortgage or a fixed mortgage at that point. So the purpose and the takeaway of this topic is, don't think they only use 30-year mortgage. There's adjustable rate mortgage options, 5-1, 7-1, 10-1 options built into the FHA program, and it's a great tool if you know you're only going to be in a house 2, 3, 4, 5, 6, 7 years. Then maybe you just want the lowest rate possible, and that could be the adjustable rate mortgage. FHA also has manufactured loan and lot programs. So these programs, when you have manufactured homes, single wides, double wides, you can actually use these low down payment and flexible underwriting guidelines to qualify for these homes. So in these manufactured homes, there's a few things that you need to know in regards to the year that the manufactured home was built. There's some information on the HUD plate that we have to verify. We have to go and look at the foundation and make sure that everything's good on that front. But if you're looking at a manufactured home, it's a fantastic option to be able to package that with the FHA loan program. So keep your eye out as you're looking at those kind of properties and make sure that you're getting into and getting some options on these low FHA programs for specifically these manufactured homes. Next thing, and this is one of my favorites, the FHA reverse mortgage. So you can actually use a reverse mortgage on using an FHA loan. You have to be 62 years old. You have to have the property has to be a primary residence and mostly paid off. The property type must be FHA approved, so that's your single family, multifamily, condo, multifamily up to 4 units. And then you have to be financially solvent, meaning that you have to be able to cover the mortgage payment with principal, interest, taxes, and insurance. So what are the benefits of using this FHA reverse mortgage? It provides an additional income stream. It can offset monthly mortgage payments requirements, and it offers you flexibility in regards to lump sums, monthly payment installments, and lines of credit. So this is something that's really amazing when you look at it when you're starting to plan for your retirement planning. This is something that can be a huge game changer for your balance sheet monthly. It's something you should definitely explore if you're getting to that point and trying to make sure that you're maximizing your income when it comes to the retirement stage of your life. Finally, the FHA Section 248 program. So this program's designed specifically for Native Americans living on tribal land. And these are reservation areas approved in Florida and other parts of the country, facilitated by FHA. And what the goal is it strives to encourage and create home ownership in these communities for Native Americans. So you need to have a stable and reliable source of incomes. Credit scores are they're a little bit more flexible on credit scores, but depending upon where those credit scores lie, you may need to put a little bit more down. Debt to income ratio, they're a little bit more solid on the mid 40s. And then the property must be used as a primary residence. So you're going to need to have proof of income, and you're going to need to basically be approved with the lender that can offer this. But if you're Native American and you're living in one of these areas, this is a fantastic opportunity for you to look at and be able to take advantage of a program that was designed for Native American people. So definitely make sure you explore that one. And then the FHA refinance options, there's a streamline option, and then there's a full refinance option. The streamline option is if you're already in an FHA mortgage, you can pretty easily refinance if rates drop and be able to jump in and quickly refinance that to take care of a rate and term option. And then the full FHA refinance will be a little bit more in depth, but can still help you achieve your goals of lowering your interest rate and basically reconfiguring that term and rate to be able to put yourself in a better financial situation. There's also a disaster mortgage program, the 203H program, which allows people to jump in and use the FHA disaster relief program to help with maybe a storm came or an event happened and there's some repairs that need to be done. This FHA program offers a ton of support that allows people to jump in and be able to get their homes back to where they need to be. And really use, when a major catastrophe happens, use this disaster relief program to get yourself back on track. The last program that I really want to touch on is the Hawaiian Home Loans program for FHA. This is a mortgage program that's aimed at helping Native Hawaiians become homeowners. And this is backed by FHA and is similar to the Native American program, where basically they found a group that's struggling a little bit and looking for some relief in being able to help you become a homeowner. And with this Hawaiian Home Loans program, if you're Hawaiian and you are looking to become a homeowner and use an FHA, or maybe not use an FHA, you don't know, definitely look into this subset program because it can be really beneficial and help you get your foot into the door in home ownership. So I know that I threw a lot at you on all of these FHA loan programs and some of the nuances and things to consider when using an FHA loan. And I stayed ground level, right? I didn't want to overwhelm you too much. If you're interested, reach out to our team. Our contact info, all of our blogs are in the description below. And if you feel that you may fit into one of these programs, let's talk about it. That's what we do. We're an FHA approved lender. We're always willing to help. We want to put you in the mortgage that's good for you, not just good for a big bank, and really, earn your business and help you create this tailored mortgage program. So thank you so much for hearing me out about all the fantastic product offerings at FHA. It's been an honor. Thank you for the time and have a fantastic day.